and you put it in around this day here. Each grid is
Yes.
yeah. So tell me, what did you put it in as? What was your entry and what was your take profit?
My entry was 1.278888.
Okay, let me type that in the coordinates by clicking on this. Hi, Kim. Okay, so 128. Say that again.
127
127.
888.
127. 888. 3 H, right?
Yes, ma'am.
Okay, so you entered at that, and then what was your take profit?
My take profit was 1.27500.
Okay, 1 second. 1 second. Move this over. Okay. All right. And 120.
127,500.
Okay. I like how you rounded it. All right. So you basically had a sale for 127,888 to 127,500.
Right.
All right. And of course, that didn't go in the right direction. What made you decide to make a sale? Because it looked like it was consolidating right here, right? So it was consolidating right where you were. And you actually, this is your consolidation here. But it broke out and it didn't break out back to the south. What made you decide to go north? I mean, what made you decide to go north, but it went south?
What was I thinking?
Say again?
I think I had thought that I probably didn't check the currency meter, and I thought it was going to come back down and then start going back up.
Okay. Okay, so you didn't check the currency meter. That's one. That's very good. I'm glad that you were able to recognize that. Super important. And then you said, what was the other reason?
I had thought it was going to come down to my TP before coming back up.
Okay, so you thought it was just going to probably go into a quick pullback, maybe, and then bounce up. So you was thinking it was going to do something like a test, possibly. Maybe you thought it was going to retest to that coordinate that you gave me, because you're familiar with the retest method, right? We talked about that on Thursday.
Yes.
So let me see. You thought it was going to do something like it normally does, right? I mean, trades. Oh, this is yellow. You can't see this, but I'm gonna make it black when I get done. So yeah, it could like that, and then bounce up, and you thought it was going to go here, and then possibly come back down here, and then you thought it was going to shoot up. Oops, that's at the end of it. Let me make it black first of all. If I do it over, I'm gonna redo that. I'm gonna redo that. All right. You thought it was going to do something like this, and then come back down possibly to retest, and then go up like it does, right? But it did not give you the retest that you were looking for, and that is very common. It's very, very common. So you didn't really make a rookie mistake there, by no means. You made a nice technical analysis. I just want you to know that. So be confident in that. And your technical analysis was very good because you consider the retest, right? So let's look at this on a higher time frame and see if the higher time frame, remember we talked about that, so hopefully you're taking notes. Higher time frame can sometimes influence your decision, right? So, because when we look at it where you were already, I know we didn't talk a whole lot about head and shoulders, but I was just trying to see maybe if that could have been, if your B could have happened to give you the head that you was looking for, you know, and then maybe come back up to give you the shoulder that you were looking for. So I'm going to do a quick class on, you know, head and shoulders. Because I know that we went over it a little bit, but I just want to make sure that you're real clear on when you find these in the market, you know, what to expect. Because these are, this is a number one reversal pattern. So it is important that you know about the head and shoulder pattern. All right, this is actually, if I was to draw one like this, this is what we call an inverted head and shoulder pattern, and not a head and shoulder pattern. Okay. All right, so I'm gonna do that, and then I'm gonna just basically what I'm gonna do is I'm going to clone that 2 more times, I'm sorry, because the one in the middle has to be always bigger than the one
on the side.
Yeah, on the two sides, and that's why I like using levels, because this right here, levels is in my academy, so I don't want to teach you something in the academy because you won't have access to the academy.
Right.
But it's the same thing. It's just that it's harder for me to grab stuff in TradingView. That's why I like using that system, the other system. I'm trying to take this triangle so that I can draw the pattern for you. And I just don't understand it. I just don't know why it's so hard in here than it is. Here it is. Got it out. And got it here. All right. And then I'm not going to make it perfect because of the sake of time. But basically, this is what it would look like in the market. This will be what we call an inverted head and shoulder. I would say inverted. Or IHS. I always try to use that, but just to only spell it out this first time. But IHS means inverted head and shoulder. And then basically the opposite of that would just be HS or head and shoulder. So basically what we would do is we just take this whole thing and clone it. And I wish there was a way I can just clone the whole thing. And then basically just flip it, right? So I can't see it because it's all the way up there. Clone. Take it over here. And then clone it again. This would be what we call a head and shoulder. Okay. It's behaving today now. It's doing much better. The reason why this is so important is what? Tell me why this is so important. What is this pattern? What's the reason?
It's a reversal pattern, and it's Most
It's
important one.
it is the #1 reversal pattern in the market. And what do I mean when I say reversal pattern?
So if you see that pattern, you know that however the trend was originally going, you know it's going to start going the opposite way.
Thank you. Awesome sauce. IHS. Excuse me. What is this again?
Head and shoulder.
All right. Very good. You're taking good notes. All right. So this is the head and shoulder, and then you have the head and shoulder. All right. So what is this right here? This triangle right here.
That's the left shoulder.
And what is this one here?
Right shoulder.
And what is this right here?
The head.
Absolutely. We're looking for this in the market. All right. Let's go try to find some in the market. What do you see right here?
A inverted.
Absolutely. Absolutely. What do you see right here?
Another. It's a shoulder.
Okay, I'm gonna put a square on it, so you'll know which one I'm talking about. What is this? Hold up. Don't say anything yet. Hold on. Let me finish my square so you know what I'm talking about. What's that?
Head and shoulder.
Absolutely. Absolutely. Now, if I was to take this bad boy and I was to drag it over here, if I can drag it. I'm struggling dragging this stuff on TradingView. All right, let's go here. Uh-oh. Almost had it. All right. What is this?
The inverted head and shoulder.
Okay, now tell me this. Tell me what this is. I taught you this one too. What is this?
That's the W. M.
M. I wish I could high five you. I'm gonna give you a virtual high five. High five. Yes. It's an M. It's an inverted. It's a head and shoulders. It's a W. Whatever you see is what it is. Now you just need to know how to trade it. All right. You got to know how to trade it. So I'm super excited that you can see it, because a lot of students cannot see it. They tell me all the time, I can't see it. I can't see it. And for you to be able to see it so quickly, I'm super excited. So that's why I'm so crunk right now. All right. So you can see the M's, you can see W's, you can see head and shoulders, you can see inverted head and shoulders. You know that when you have an M, what's going to happen?
That is going to start going down.
Come through, come through, come through, Jonathan. OMG, look at that. It went down. Didn't it go down?
Yes.
It went down, right? Awesome, 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 awesome. All right. Now, tell me where you see a W at in the market. Tell me where
there's one right there.
Tell me where you see a W.
If you go a little to the right.
To the right, okay.
Then there's a W there.
I'll just take my little box here, and you just tell me when to stop my little box, okay?
Okay.
Uh-oh. My little box don't want to drag. It want to open up. Close it back. All right, just tell me when to stop.
Stop.
All right. What happened to the W, Jonathan?
It went up.
It went up. You are going to be a master trader. You know that? You know that, right? You are going to be a master trader. It went up. Now, you've mastered W's, you've mastered M's, you've mastered inverted head shoulders, you've mastered head and shoulders. You know how to trade. Let's go back to where you were and the decision that you made. You said you looked at this and you thought that it was going to come back down and test. For some reason, you thought it was going to test.
Yes.
All right, so let's look at it. Tell me what you thought. What made you think that it was going to test?
Because I think where I had set up the zones, where I had them set up, it made it look like to me that it was going to come down and
Yep.
test and then go back up,
Okay.
and it didn't.
Okay. So did you put a stop loss in there?
No, I was checking it constantly, so then I got out once I realized it wasn't
Okay.
going the
Good
way I
job.
thought.
Good job. You got out of it. Okay. So we want to make sure we have a stop loss. And what's the average stop loss in the market?
Like 50 pips.
Okay. So that's what one of our educators say, and there's only he's one of very few that say it will go that high, right? Most educators and tenured traders are going to tell you that the average pip is 20 to 30, but he's back tested a lot of times and have seen where it'll turn around at 50. So just know that 20, 30 is average, but 50 is like the extreme. But if it don't turn around at 50, you probably lost a trade. And most people don't want to wait that long to lose that much money, to be clear. So they would probably just do a 20 pip stop loss, or maybe 30, depending on what their account size can hold. But 50 is like the max, because what it is you don't want to lose the money if you can just wait and just, you know, go as far out as you can and it's going to turn around. You just rather just let it sit there. You see what I'm saying?
Right.
Okay. So in this case, we would have lost a trade even if we would have went 50, right? Because it went all the way up here.
Yeah.
And that's well over 50 pips. All right. So I like that you were thinking that, you know, it was going to come back down. And if it would have came back down, you know, it could have made a head and shoulder, right? Like it could have came down to here and then give you a right shoulder, right? Which would have been equal to this left shoulder, right? Because you see the left shoulder?
Yes.
But here's what we didn't teach you yet, Jonathan. We didn't teach you about where the market can sometime reverse at. So let me write this down. The market moves in quarters, okay? Write that down. The market moves in quarters. And so now here comes the Fibonacci. All right, so let's find the Fibonacci on this bad boy. Fib retracement. The market moves in quarters. Oh, that's why I don't like Trading View. I don't like their fibs. All right, let me see if I can play with this fib for a minute. This is going to take me a minute. Let's see. Try to get this thing set right. All right, let's see if we can make this thing into quarters. Can you help me make this into quarters? Let's see. 25. $50. And I'm just going to uncheck this. I'm going to do 0.75. I'm going to do 1.75. They may not do it because it's higher. Hold up. Let me see something here. All right, my computer is freezing. Let's see, point. I want to give me a point. I'm not doing all that. Let's see here. 0.75 is what I'm trying to do. All right, uncheck this, uncheck this, uncheck this, uncheck this, uncheck this. Make these black so I can see them. All right. Make that black. I don't care about all these crazy colors. Make this black. And make this black. And make this black. It got to be a way where my fibs can stay like this forever. I never want to use what they use. Never want to use those. All right. I want to use this because I know that the market moves in quarters. Now, because I am drawing a fib from the top down, it's going to flip-flop. It's going to see I got the 0 at the top instead of at the bottom.
Mm-hmm.
Now what I'm gonna do is take this fib and bring it over here. It's kind of, because I want you to see the quarters and I want you to see like where it changes, right? So that was the top. You want to go from the top of that wick to the base of the actual, the wick over here, at the bottom.
Mm-hmm.
From the top to the bottom. So I told you that the market moves in quarters, right?
You're right.
Okay, so because it moves in quarters, that's why you can expect the reversal to happen in the market when you are in a reversal pattern, like a head and shoulders or inverted head and shoulders. Does that make sense?
Mm-hmm.
Okay, so as you can see, the quarter was where? The quarter was on this black line right here, right? Do we agree? That's the quarter, the 0.25 you see there, that first quarter. You got a quarter here, you got 50% here, you got 75% here, you got 100% here. Forget what's in the parentheses. I'm not even forget it. You can write it down because you can know what that means, because those numbers mean something. But 0 is 0. It started at the beginning. Then it went 25%. Then it went 50%. Then it went 75%. Then it went 100%. Now at the 25%, which is where this line is, what happened?
It kept going.
Huh?
It kept going.
It reversed. Remember? This is a number one reversal pattern. So you got to look for the reversals where? Where do you look for your reversals at? Where do you look for your reversals at?
With your
you're going to look for your reversals every what? 25% or every quarter. So if you would have drawn your fib before everything happened, you would have said, all right, I want it to come down to the 50%, which is where, or I should say 75 or whatever you had it at. You had it, you actually had it here. You actually had yours here at the 50%. That's where your TP was. This is your TP. Because you remember you said you had it at 1.27500. So you had it at the 50%, but it didn't even give you 50%. It actually turned at the 25%. So it turned at the quarter and it went up. If you would have known what you know now, and you saw that thing reverse, and you know this being the number one reversal pattern, you would have said, wow, this thing is about to reverse. I better go in for a buy. And quickly you probably would have went for a different TP, or at least just let it buy up, or however you wanted to do it. But look how much it went up. And I'm telling you, it came back down and it went back up. So what is this right here possibly?
That would be a W, kind of.
Right? But it's probably what? You're probably possibly your head for your what? Inverted head and shoulder, right?
Mm-hmm.
Isn't that possible?
Yes.
It could be. But not really, because why? Your left shoulder is all the way down here, so that can't be possible, right?
Mm-hmm.
So let's look at the big picture. This is why the big picture is important. Where can you see it inverted? You see it inverted here. Now this is where going to the 4 hour is more important on a higher time frame, because you're looking for what? Your left shoulder, or I should say, let's go back. Because you want to know at this point it's going up, 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 up.
Mm-hmm.
You want to know where is it going to stop, right?
Right.
So this is probably going to be a longer trade now that it's reversed, because it's just going up, up, up. So what you would do is just go to the 4 hour time frame. Look for where is it possibly going? Like, where is the peak at? Where is the left shoulder at? This is probably the left shoulder. Would you agree? This yes, right here, this M, it's probably the left shoulder, because you got it going up. Do you see that in the market? I'm gonna make it bigger for you. Let me make these shapes for you so you can see what I'm seeing. Tell me if you can see what I'm seeing now. Left shoulder. I don't have time to type it. I'm just going to put it on here. Left shoulder. Uh-oh, wrong one. I grabbed. Move that over. So it's already past the previous peak over here. So now you want to see, well, if it passed that, is there another peak somewhere? And you got one up here, right?
Mm-hmm.
So it's possible, but that's going to take a little bit because we're on now the 4 hour. You see what I'm saying? But who trades on a 4 hour? Who trades on a 4 hour time frame?
Not a lot of people.
It's very important that you know this.
Oh, the bank.
The banks. And so that's why it's important. They move the market, okay? People don't move the market. Write this down. People don't move the market. The banks move the market. They got those are the big boys and girls. Those are the big entities. They got the money, all right? They can move the market, all right? So why would we want to trade what people trading at? They don't have as much money. The banks move the market. So the 4 hour time frame is going to trump anything on a lower time frame all day long, okay? All day long, because this is where the banks are trading. So let's look at this. And you can get a whole lot of pips on a smaller time frame. Don't get me wrong, we do it all day. But if you are a swing trader, you're not trading with the low boys. The swing trader is people that trade with the banks. They trade higher time frames. They trade for weeks, maybe days. They start off with days and then they go all the way up. Basically, they start off with days and they go all the way up. So they're not trying to trade all day long and scalp and all that and lose their money. They're trying to just trade, drop a penny on it and keep it moving. All right, 1 cent and just if they don't have enough money, if they got a lot, then they'll add more to that. But the goal is that they can be able to trade long term and not short term, and it's actually more lucrative because you're paying less in fees. If that particular pair is moving a lot, right? You're paying less in fees because it's less days, because every day is a swap fee. However, if it's moving a lot every day, that'll exceed the amount of fees that's accumulating. Does that make sense?
Mm-hmm.
All right, so we just showed you that this thing is possibly because it's already exceeded here, it could possibly go up to here, and that's a whole lot more pips. You look at that, 31875. What's the pips on this, and how many pips is that from where it's currently at in the market? It's currently at 1.29134, and if it goes up to the previous high, it's going to go up to 1.31875. What is the difference in pips there? Can you calculate that?
Let me just pull out the old calculator.
And remember, if this cuts out, this come right back in, okay?
Okay.
Because where are the pips at on this particular pair? Where are the pips usually when you have 4 places after the decimal? Where is it going to usually be at if it's 4 places behind the decimal?
It's going to be the last 2.
No, sir. It's going to be the second to the last 2, right? Just look at your MetaTrader 4. Act like you're going to place a trade. And what are the big numbers? Those big numbers are your pips. So now I want you to calculate how many pips it is. I know it's moving a little bit, but just give me a good pip amount. So you got 0.31875, right? So I would need to keep it simple for me. I would just do like a 187, right? And I would just subtract like the next 3 numbers, right? So I would do 3187. I would just do the 3187, and then I would just subtract the 2914, and that gives you 273 pips. And that's if you want to do it manually. You could also do it with a measure, right? Here's your measure right here, right? You can measure, take it over to where your line is, and you can just kind of draw it up like this, right? And it's saying 397. However, I did that wrong. And you saw where I started at. I didn't start the right place. So you got to start it from where these dotted lines are, because that's actually where it's at in the market. So let me start over. dotted lines here. That's where we currently are. We go all the way up. And it's saying 281. So that's very close to what I had because it's moving and moving and all that good stuff. Remember, I had 273 and it's saying 281. So it's very close, only because it's moving around. So we know that it's going to be about 281 pips. So that's a lot of pips. That's a lot of pips, okay? So what we want to do is, yeah, this is a nice long-term buy. Do you see the screen or what it says?
Yes.
Okay, so we got about 10 minutes and then we'll jump right back on. All right, so what questions do you have about what we talked about so far? And then we're gonna go back and talk a little bit more about your TP. Any questions?
No.
Okay, so our right shoulder is probably gonna do something like this when it comes back down. Hi, Bridget, how's it going? So we are, but yeah.
Yeah, I'm definitely an afternoon girl because of work.
Oh, I got you. I got you. So cool. So Jonathan, so that was basically how we got our TP, the two ways, and then that's inverted head and shoulders and head and shoulders. I do believe that it's probably going to go back to the old high. But it's possible that it could reverse on us at where? What do you think it could possibly? And, you know, I'll tell you this. We talked about Fibonacci, and we talked about how the market moves in quarters, 25%, 50%, 75%, 100% here. So literally, it's at its peak of this particular, right? So, and that's, we put that line, actually, let's go back out on a 4-hour. And see where it peaked on this. Okay, so it's already surpassed that, so it's definitely not there. And the very next one is going to be the one that we drew it at. Yeah, this is one here too. Okay, so basically we would go over here and say, well, if the market moves in quarters based on where it's at right now in the market, and it being at the top of that peak already, at the top of this one here, we could possibly draw a fib there, right? Actually, that's the measuring, sorry. Let me get the fib really quickly. By time runs out here. All right. So that's the top of it, right? So we could draw our fib for this entire one here. I'm glad it saved it for me. I didn't have to redo that. And see if there will be a place where it could reverse that, right? Because we said that the market moves in quarters. So I would do it at the top of that peak right here to the top of the next head, right? And then somewhere along the way, it could reverse, right? So let's go ahead and put it at the quarters because that's where the market could reverse at. And I can do that one more time. Basically, well, I'm just going to keep cloning that at each quarter. So that's the 25%. We'll do it at the 50% and 75%. Oh, here's my clone button. I was looking for it. All right, perfect. So I'll just put that there. So anywhere along here, you can basically do TPs at each one of these because every time it hits a TP, a take profit, you know that it's going to go into what? What's going to happen at every take profit? I didn't tell you this yet. I'm going to see if you can guess. At every take profit, the market is going to reverse. It's going to do what we call a pullback before it goes to the next. Remember I told you, I thought it was great that you put your TP there because you was probably thinking it was going to pull back. Because you see how, look at this right here. You see how it hit that line, then it pulled back? You know?
Yep.
And then it dropped, then it retested again, it pulled back, it retested again at that same line, it came back. The market just keeps moving in quarters and quarters and quarters. And whenever it pulls back, it can pull back as much as another retest to where? What's at the top and what's at the bottom?
At the top, you have the one.
What did I talk about? The ceiling. I talked about the floor. What are those?
I can't see. So 0.5.
The support and the resistance, right? That's the first thing I said you got to learn. You got to remember that, the support. I said, because if you can figure out what a support and resistance is, that's where you make your money. You want to get in right here at the support or the floor. Remember I talked about bouncing the basketball off the floor? And when it reaches the ceiling, that's the resistance, because it can't go any further, right? So you want to buy at the support. You want to buy low. And when it gets up to the ceiling, or the resistance, you want to sell high, so that you can make a lot of money, right? All right. If you get in at the support, you're giving yourself an opportunity to get more and more pips. But if you get in the middle, now you can suffer some pullbacks at what? The quarters, the 25%, the 50%, the 75%, and lose your money. So you want to always get in at the support or the resistance. And then what you can do is do what? You can trail your stop loss in profit. Once it moves a quarter, you can put your stop loss in profit, so that if it continues to do a pullback, you don't lose your money. You just secure your profit, right?
Right.
Does that make sense?
Yeah.
All right. So we want to trail out stop loss in profit once it's in profit, because you cannot do a stop loss and profit in the beginning. It has to be a stop loss and where you're going to lose, because your MetaTrader 4 will not allow you to put it in with a positive. But when the candles are moving towards your take profit, and you're in money and you're in profit, you can actually put that stop loss to where it is now. We're going to come right back. It's less than a minute. Just come right back on in. Just got to let that minute run out.
$17 learning this. That's awesome.
I know, isn't that? I told him he'll never work for nobody if he don't want to.
Exactly. Take your time and master it.
Exactly.
I wish I had it at 17.
I know. If I could just have it in college, that'd been good.
At 55, it's kind of hard to grasp this now. I'm gonna get there.
You got it. You got it. This you could watch. Don't underestimate. You gotta have the teacher.
Yeah.
Everybody can't teach.
You got that right.
Yes.
But you can. You're doing great.
Thank you. Thank you. Thank you. This is a long minute too.